Welcome to Economy Disrupted. I'm Matthew Goodman, Senior Vice President for Economics at CSIS. Delighted to have you with us. Stephanie Siegel is taking this episode off, but I'm delighted to be joined by my friend Amy Celico, who is the China head at Albright Stonebridge Group, and more importantly, she's a non-resident senior advisor to our program at CSIS. Delighted to have you with us, Amy.
Thanks for having me, Matt. I'm really excited to be here today to talk about all things trade. If you have questions, please do look at the link below and submit your questions there.
Right, exactly. We'll be taking questions towards the end after our conversation with our guests. The show's going to run about 50 minutes as usual. We'll end with our usual segment, the bottom line, our moment of Zen, as it were. So please stick around for that. But in the meantime, we've got about 45 minutes with our guest, Ambassador Michael Froman, who is Vice Chairman and President of Strategic Growth at Mastercard and former U.S. Trade Representative. And nice to have you with us, Mike.
Matt, thanks for having me. Delighted to be here.
Thanks so much. So we'll jump right in and let me start with trade, hard to avoid. So President Trump has gotten a lot of criticism for aspects of his trade policy, you know, the kind of single-minded focus on bilateral trade deficits, the use of broad tariffs that are now declared illegal by the World Trade Organization, you know, his decision to walk away from the Trans-Pacific Partnership Agreement. But on the other hand, you know, he gets some credit for some things, renegotiating NAFTA, the North American Free Trade Agreement, into the U.S., Mexico, Canada agreement, USMCA. He did a pretty good digital agreement with Japan, for example. He's not wrong about the problems in the WTO dispute settlement system. So how do you assess all of that?
Well, I think you're the way you concluded is right. A number of the issues that the administration has put forward are legitimate issues in the WTO and the need for reform, issues with regard to China and longstanding issues in that relationship, issues about the importance of updating NAFTA. So the issues, I think, are in many respects correct and legitimate. We can have differences over tactics and how best to go about addressing those issues, how far one has gone to address those issues. But I think many of the issues predated the Trump administration, and the Trump administration kept them very much at the focus of the agenda. And I do give the Trump administration credit, for example, with USMCA, in pursuing it in a way that was able to engender broad bipartisan support. And I think that's positive overall for helping to build greater support for a fair and free trade agenda going forward.
And do you think this could be, well, let me ask about the WTO first. I want to come back to sort of other issues, but on the WTO, I mean, this organization, you know, is one that we really helped or led the creation of. It's provided, you know, some tremendous benefits, but it seems on all three of its kind of major strands or major pillars of negotiation, enforcement, and sort of surveillance or transparency of the system, it's failing in some of those areas and not doing as well as it could. What's the problem and what's the solution there?
Well, I think if you take them separately, and when it comes to negotiating, it is hard to negotiate among 164 countries in a process that requires consensus. I think that's one thing we've learned. And since the WTO was created with the Uruguay round in the 90s, we've really only had one major fully multilateral agreement. That's the Trade Facilitation Agreement back in 2013. But I think what that has spurred on is the need for there to be regional, plurilateral, sectoral agreements, even bilateral agreements that can help continue to advance the effort to set new standards, particularly for new issues on the agenda, like the digital economy or e-commerce or other issues like that, in the hopes that over time, those agreements can build sufficient support and sufficient momentum that they can become multilateral agreements. But we can't wait for the lowest common denominator when it comes to addressing these issues. And therefore, I think you have to be pragmatic in how we pursue that. I think on the dispute settlement side, the issues that the Trump administration have focused on, and particularly with regard to the appellate body, are not new. And as you recall, in the Obama administration, we too raised concerns about those issues and prevented the reappointment of one appellate body member and supported a replacement nominee. I think the question is, now that we have put reform squarely on the agenda, and there is more and more interest in seeing reform, we have to execute on that and really begin to get countries to get specific about what kind of reforms they can accept, including going back to the Uruguay round and looking at the intent of that agreement when it came to dispute settlement. There is a debate, I think, and I think not everybody adheres to the idea that it's good to have binding dispute settlement on countries. It has generally served the United States well, in my view. We haven't won every case that's been brought against us, but we've won a lot of major cases against other parties, including China. As you recall, in the Obama administration, we brought, I think it was 16 cases against China, and we won every case that had gone to conclusion. And so I think if there is consensus that we still support binding dispute settlement, then we need to get this appellate body issue fixed. I don't think it's that difficult to fix. And I think now that the rest of the global community, including all of the candidates for Director General, have said they support a reform effort, I think that would be a good area of focus for the next couple of years.
Okay, well, there's a lot more to say about that, and maybe our questioners, our audience, will ask more targeted questions. But let me, Amy, if you can indulge me with just one other follow-up to Mike before you take over. So Mike, I know, but first of all, let me caveat for the audience that Mike is not a spokesman for the Biden administration. He's speaking in his own capacity. But let me just ask, if Vice President Biden were to win the presidency, how do you think he'd take some of these issues forward? And specifically, he's put a lot of emphasis on domestic policy measures, Buy America, investing in innovation, infrastructure, climate change solutions. And that all sounds reasonable, especially, given the disruption of the pandemic, and that's probably going to, in practice, occupy him. But trade has this way of kind of showing up at awkward times just when the party's going, and it's sort of, you can't ignore it. And they're sort of signaling somewhat that there's not going to be much of a priority on trade. Specifically, I'm sorry, there's a lot in this question, but I want you to see where you take it. Let me just ask one more dimension. Specifically, if a President Biden goes to Asia, as is traditional, in the fall of 2021 for the APEC and East Asia summits, there's tends to be, as there was in the Obama administration in 2009, some expectation that there's going to be a regional trade policy. And so the question there is, what about TPP? Is this something that a President Biden should get behind? Is that realistic? What's the alternative? So there's a lot in there. I apologize, but just how to take all this forward.
Sure, and let me reiterate what you said at the beginning, which is I'm not an advisor to the Biden campaign. I don't work for the campaign or the transition or anything else. So this is very much my own view. But I think that first of all, the focus on domestic issues is absolutely right and critical. And I believe when we look back over the last 20 or 30 or 40 years, one of the failures of trade policy has been insufficient attention to the domestic policy agenda that should go along with it. And I don't mean just trade adjustment assistance or things of that sort, but we have not done enough as a country, and this is both Democratic and Republican administrations, to help prepare workers for the challenges of succeeding in a rapidly changing economy, whether that change comes from technology, which is where most of the impact on wages and jobs comes from, or whether that change comes from trade and globalization. And I think it's right and appropriate that be a priority going forward, particularly at this critical time in international economic affairs, that we focus on the domestic policy agenda and make sure that we are fully prepared to succeed in this global economy. I think let me answer your question this way. I don't have any high expectations that Biden administration is going to rejoin TPP in its current form, and by any means. I think what's important is that many of the disciplines that we negotiated in TPP continue to make their way into the international trading system. So the U.S.-Japan agreement that had the digital chapter, the agriculture chapter, those basically came from TPP. The USMCA, much of it came from TPP, including the issues around the new economy, digital economy, things of that sort. And as I understand it, the conversations going on with the UK about an FTA are based largely on some of the same substance that was negotiated in the TPP. I think the result is that over time, we'll see many of the same disciplines make their way into the international trading system, although we have lost, I think, some of the strategic benefit that came from leadership associated with that effort. To answer your question, I think the U.S. remains a Pacific power, and we have very important economic, political, strategic, security interests in the Asia-Pacific region. And I imagine any president will want to do something to further tie that region to us. It may not be a big trade agreement, but it could be a number of areas of cooperation, particularly around new issues facing the global economy, such as technology and the digital economy and data flows and privacy, and making sure that issues that are not at this point sufficiently addressed by the WTO, that we can still make progress towards setting standards that will allow for good competition, but in a way that it reflects our interests and our values.
Great. Well, a lot in there and a lot more to talk about, but let me hand it over to Amy.
Let's stick with Asia, Mike, and specifically turn to China and the impact of U.S.-China trade tensions on the global environment. As Matt and you just mentioned, of course, the administration is getting some grief for its use of tariffs this month, not only from the WTO, but from American companies filing suits at the U.S. Court of International Trade against USTR. For the Section 301 duties. And so compared with Trump's policies, I'm really interested in your views. How do you think the Chinese are doing internally and on the global stage in terms of garnering support for its policies and building its reputation in the post-COVID economy? Do you see any real movement of countries leaning away from the United States and towards China, or do you think most are waiting for November to see what happens here in the United States before choosing sides?
Well, it's an interesting question. I think countries don't really want to have to choose sides. And certainly in Asia, even our closest partners there feel that they need to have a good and constructive relationship with China, which is historically the largest economy in that region, and an important partner, usually the number one trading partner for most of these countries. But they also want the U.S. to be involved and engaged and playing a role in balancing China in the region. I think one of the more disturbing pieces of information that's come out publicly in the last few weeks has been not so much the role where governments stand, but where publics stand around the world, and the polling that shows that we have fallen in terms of trust and in the eyes of people around the world, and where China and even Russia at times are seen as more trustworthy partners than the United States. And I would hope that in the future we could reaffirm our leadership role as a trustworthy partner around the world. I do think that given some of the recent developments in China, they might have taken further advantage of the pullback that the U.S. has undergone over the last few years than they did. But the fact that they've not stayed as aggressively on the policy of economic reform and opening up, the fact that there are issues obviously around Hong Kong and human rights, I think that this is not a situation where China has won and the U.S. has lost in terms of the court of public opinion around the world. It's still very much, there's still very much an opportunity for the U.S. to assert its leadership and to reestablish its role in that regard. but that takes work, and that takes engagement. It takes a lot of diplomatic effort, and I'm hopeful that in the future we'll see that.
Yeah, I completely agree with what you're saying about the jury is absolutely out, and no country wants to choose sides. I do want to follow up on what you were just saying about what's happening in China. I'm interested in your views of whether you think this current Chinese system can effectively shield itself from what Xi Jinping himself has referred to as increasing headwinds in the external environment. And I assume he's talking about the vulnerabilities that China is facing due to shifting global supply chains and increasing pressure on China for the reasons that you just mentioned over its unfair trade practices, human rights policies, technology policies. The Chinese government, as you know, has put forward this dual circulation strategy that decreases reliance on trade and increases reliance on domestic consumption and self-sufficiency, and of course, continues to maintain a role for foreign investors. To me, it sounds a little bit like the third plenum reforms that the Chinese government introduced when you were U.S. trade representative. And of course, during the years that you were negotiating with the Chinese, they didn't actually roll out those reforms and implement them. And so just following up on what you were saying a moment ago about changes in China, do you think the Chinese can be more successful in 2021 in pursuing the state-led economic growth model? Or do you think some of the disciplines you are referencing that could end up in international trade agreements, the Europeans in negotiating with the Chinese on an investment agreement, are going to prevent China from having it its way and not accommodating more openness in its own economy and in the global system?
Well, I think in terms of dual circulation, on one hand, it reflects it's consistent with the point of view that the rest of the world has had about China for some time, that China needs to rely more on domestic demand-led growth, less export-led growth. It needs to further its services sector, et cetera. So on one hand, it might be seen as a positive, that it's a reflection of that shift towards greater domestic demand-led growth. On the other hand, if it's combined with the notion of import substitution, of telling both state-owned and private companies in China that they should source only domestically, and that there should be restrictions on the role of foreign companies in terms of competing with those domestic entities, then that won't be a positive, and that will be the cause of new tensions between China and the rest of the world, rather than a positive there. I think much of our engagement with China over the last 20 years has been based on the assumption that they were on this inexorable path towards greater openness, economic liberalization, market reforms. And I think one thing we've all learned is that process has not been as fast or as linear as expected, and that there's been some backsliding and some reaffirmation of the role of state-owned enterprises, of state-provided subsidies, of whether it was indigenous innovation or movement towards China 2025, or perhaps the flip side of this dual circulation argument, that it's not an inexorable path towards greater openness. I think over time, it's that openness that will help alleviate some of the tension between China and the rest of the world. And that's why when we were negotiating the bilateral investment treaty, we focused on issues like state-owned enterprise disciplines and subsidies and forced technology transfer and IPR protection. And it actually gotten quite a bit down the road on all those issues when time ran out. But I'm hopeful that those in China who are still pushing for reform will find a way to use this emphasis on dual circulation in a manner that leads to greater openness, not less openness.
Great. Mike, let me, again, lots to talk about there at a follow-up, but maybe we'll do that in the Q&A. But let me shift gears a little bit and ask you about your current work at Mastercard. So you had something called the Center for Inclusive Growth, which is focused on, as I understand it, financial inclusion, use of data-led problem solving, elevating women in the economy. First, tell us about that work. And then you talked earlier about the link between sort of our domestic economic conditions and sort of our position in the world. I'm interested in how this work relates to our sort of standing and our strength in the world. That'd be helpful. Great.
Thank you. Well, look, MasterCard's been involved for more than a decade, really, in this area of financial inclusion, and sees it both as the right thing to do, but also very much good for business. That if we can bring, as we did, 500 million unbanked individuals into the financial system over 5 years. Now we've doubled down on that commitment. We're going to raise it to 1 billion people, 50 million micro and small merchants, 25 million women-led, women-run entrepreneurs into the digital economy. That it creates more inclusive economies, more sustainable economies. And as those economies are the ones that are likely to thrive, and when they thrive, we thrive as a business as well. One thing that's been clear is that while a lot of the focus initially had been on developing countries, we've got tremendous issues here in the United States. We still have 30 or 40 million people who are unbanked or underbanked, underserved. And we have focused on making sure from the Center for Inclusive Growth, which is our think tank and our Center for Philanthropic Activity, but also from our business, how do we bring all of our assets to the table in a way that can help further inclusion here in the United States? And we've been at that for some time. When COVID hit, of course, and we saw particularly the impact on vulnerable individuals and on small businesses, we focused on helping governments get resources into the hands of individuals and small businesses, and helping small businesses migrate online so they can continue their business safely and securely. And then when the George Floyd murder happened and racial equity issues came to the forefront, we built on our work on financial inclusion to say, let's focus on 7 cities and the particular challenges that Black communities in those 7 cities face in terms of a wealth and opportunity gap, and bring our philanthropy and our partnerships and our products and services to address those issues as well. So that's part of our broader global financial inclusion efforts, but it's very specific on the challenges and the needs of Black communities in the United States as well. And it goes to your question, which is, I think whether it's racial equity issues, financially vulnerable people in the United States, the financially insecure, you know the figures about 47% of the American public not having $400 to weather a downturn, and we've now seen a downturn with COVID. We're focused on how do we bring all of our assets to the table to try and address that. I'll just give you one example. I'll give it from our issues on race. Black families are likely to spend 50 to 100% more to access basic financial services. And if you think about payday lending, expensive check cashers, expensive remittance providers, it's expensive to be poor. And we're taking our products and creating mechanisms to make it much easier, much cheaper, much more affordable for people to access basic financial services and create greater financial security along the way.
That's great. I think, I've also been sort of struggling with this question about that you alluded to at the beginning, and then have sort of elaborated here about how we folks focused, all of us on this call, focused on sort of the international agenda and how to, do better trade agreements and all the rest, open markets and so forth. Maybe didn't pay enough attention to some of these domestic concerns. At least that's my take as well. I wonder, just this is more maybe slightly wonky question, but you spent a lot of time in government on that international side. I mean, you were also the deputy to the National Economic Council, but I'm just wondering kind of organizationally whether we don't have it right, because we have sort of these silos of, international stuff and domestic stuff. They talk, but they're not really as integrated as maybe they should be. Is there something we should be doing differently as a government to try to pull these things together?
I actually think the way we were organized, and I understand now it's changed a little bit, but the way we were organized that began in the Clinton administration was enhanced in the Bush administration, and then was further enhanced in the Obama administration, where you had that joint staff that worked for both the NEC and the NSC. And with the NEC hat on, the goal was to make sure that international economic policy and domestic economic policy were linked together. And this wasn't for lack of effort. I mean, if you recall, the Obama administration made a number of proposals about free community college, lifelong learning, things of that sort. It just nothing happened with Congress on those issues. But I think there does need to be a concerted focus on this. And particularly because the economy is changing in significant ways. It's not even just about technology and trade. You now have the gig economy. And so the notion that you're likely to work for a company that provides you full benefits for the vast majority of your adult life, that's sort of an antiquated notion. You now have a very significant portion of the American public who put together 2 or 3 part-time jobs, oftentimes with no benefits whatsoever. And we need to find ways to make sure that benefits are portable, that you can combine contributions from different employers, different gig economy platforms, for example, into a mechanism that allows you to access not just healthcare, but retirement security, elder care, paid family time off, things of that sort. And a number of states are experimenting with this, and private sector companies are experimenting with this. And I think it's in a very important time to try and further that effort, so that there are multiple paths towards financial security. And when people are feeling more secure, they're much more open, I think, to the opportunities that engaging internationally offer. And if they are feeling insecure, wherever that insecurity comes from, it's much easier to blame trade or blame immigrants than it is to focus on these other issues around our domestic policy that really lie at the heart of the issue.
Agree with all of that. Amy?
Yeah, Mike, I'd like to stick with the changing landscape for U.S. business and the role of the private sector. So I'll come back to China again and ask you how you see the business community dealing with the prospect of continued decoupling with China, regardless of who wins the election in November. And this dovetails with a question we received from Reuters specifically. Do you expect a high level of reshoring, bringing businesses and manufacturing back to the United States as a result of Trump's trade policies and COVID-19? And do you think there's much evidence that this shift has already started?
Well, I think every company looks at its supply chain from a number of perspectives, including not only cost but operational risk. And I think the review of supply chains that were heavily dependent on China was already underway because of the rising costs in China over the last decade. I think that became accelerated with the trade tensions between the US and China, with companies feeling like they couldn't rely solely on suppliers in China. And then I think COVID probably further accelerated that trend as people looked at operational risk. Where were they relying on their inputs from? And where do they need to create redundancy or resilience in their supply chains? I think the open question is, to what degree does that lead people to actually move production out of China? To what degree does it mean that their incremental investment might go someplace else? And if it does go someplace else, does it go to countries like Vietnam, Malaysia, Mexico, Central America? Or to what degree does it actually reshore back to the US? And I don't think there will be one answer. I think it will depend a bit on the nature of products. But you could see greater regional supply chains, things closer to home being made rather than relying on halfway across the world. And whether or not that actually leads to much more reshoring into the US market itself, I think remains to be seen.
Follow up to that, more forward-leaning. Senator Warner has given a series of speeches, most recently at the National Democratic Institute, in which he highlights the actions that industry and the government, US government, need to take to limit interactions with China, not just about supply chain resilience, but around national security concerns, and to work together with like-minded partners to build alternatives to China's growing dominance of key industries. And his support for industrial policy making isn't just about unfair trade practices. It also, as you already mentioned earlier, Mike, revolves around concerns about privacy, human rights, other issues of values, and with bipartisan support on the Hill. So how do you see the U.S. business community reacting to these pushes? Do you think that we're going to have a business community get a clearer steer on some of these issues if there were a change in administration going forward?
I think this is it's a very dynamic area right now, and I think there's a lot to sort through. How much of it is about national security? How much is about competitiveness generally? To what degree is there going to be industrial policy, and how will that operate? How do we ensure that it's, if it happens, that it's successful? And to what degree is it just opening up other opportunities where the private sector can create competitive, redundant, and resilient alternatives to Chinese suppliers? So I think this is all going to have to get sorted out, but it may vary from sector to sector, industry to industry, and I think there's not going to be, again, a one-size-fits-all kind of answer. One thing governments are really great at is fighting the last war, and so I'm confident that coming out of this, we're going to hear a lot of conversation about making sure we've got access to PPE and to the compounds that go into critical drugs and things of that sort. We're better at fighting the last war than anticipating the next risk and the next challenge. And I think that's sort of on all of us to sort of think through what's the next challenge that we all need to be prepared for, and how do we position ourselves to be able to address that challenge.
So in a second, we're going to take audience questions. We've already got some good ones. If you have others, please submit them in at the link below the screen, hopefully, that you can see. But let me try and sneak in one more, Mike. So you were the G20 Sherpa. I was your yak for a while. My shoulders still ache from that experience. But seriously, you wrote the shortest paragraph in G20 communique history in 2009 in Pittsburgh, when you talked about all the things that G20 had done in the previous two summits in the previous year. And then there was paragraph 3 or 4 said, "It worked," period. Brilliant paragraph. Admirable. Today, it would be difficult to write that paragraph, I think, about the G20's work on pretty much anything, or frankly, international cooperation generally. What's wrong? I mean, we've got this huge, obvious global challenge of the pandemic and its economic and other ill effects. It seems like tailor-made for an organization like the G20. It's done a few things, and I'm happy to have you, say what you think has been useful. But in general, I think most people would say it's not Pittsburgh. So what's the problem and what's the solution?
Boy, I'd forgotten about that paragraph. Thank you for reminding me. I think back in 2009 and 10, the question was, the G20 was absolutely critical in dealing with the global financial crisis at the time. But what would happen once the crisis abated? What role would the G20 play in terms of providing a forum for international cooperation and governance? And I think perhaps it strayed into areas and became more bureaucratic than was desirable. Now we're back in a crisis, as you said. It's a global health crisis. There's a global economic crisis. We have a global climate crisis. These are issues that are ripe for international cooperation, but it takes leadership. And The U.S. has always played a disproportionate role in ensuring that forums like the G7 and the G8 and the G20 produced at the end of the day, worked at the end of the day. And so it's going to, I think, require further U.S. engagement and leadership to get back to a appropriate, perhaps narrowed, slimmed down, targeted role for these institutions in a way that addresses the immediate challenges of the day. I'm hopeful, though, that as we look ahead, it can take on a number of these issues, including issues that sort of fall between other international organizations. Take issues around, for example, technology and the digital economy. What sort of cooperation should there be on that combination of issues around the role of technology platforms, of the digital economy, and that there could be some mechanism that the Gs could help spur on that would create a process for collaboration that cuts across a number of different issues. So I'm hopeful, but it will take U.S. leadership.
Right. Well, that's actually a perfect segue into one of the questions that from the audience that I actually wanted to ask about as well. The way the audience member asked it was on digital trade, isn't the U.S. position undermined by the TikTok precedent created by the current administration? The way I'd sort of broaden that or refocus it is, I mean, that issue about TikTok is about data. I mean, or the algorithms that are created on the basis of data. And your company that you work for now is a data company, basically, if I'm not, mischaracterizing your business model, but it's data is critical. Data governance is not something that the world has figured out yet. There are at least 3 or 4 different models kind of emerging. There's a European model based on the GDPR, the General Data Privacy Regulation, if I got that right, Data Protection Regulation. There's a sort of an Asian model that's emerging between the US-Japan Digital, USMCA, TPP-ish, APEC model, but that's a little bit ill-defined. The US doesn't have a federal privacy standard, but California is going ahead and implementing one. But we haven't figured all this out. You mentioned the U.S. kind of has to lead in this. How should we lead? What should we be doing on this question of data governance?
Yeah, I think it's a great question. Look, I think it's really important to distinguish between privacy and data flows. GDPR, I think the European Union has shown regulatory leadership in coming up with GDPR, and the consumer elements of GDPR are, I'll just speak for my company, but I don't think we're alone in this regard. We're applying the consumer elements of GDPR globally. And you see in California and various other places, privacy is absolutely a top priority. And if we're going to have people trusting in technology, then you've got to be putting privacy very much forefront. And so, from our perspective, we have a very clear view that people should own their data, people should control their data, people should benefit from their data, and the role of companies like ours is to protect their data. And those are our principles that we live by, so that we don't share, we don't do anything, we don't have personal information, we don't know your name when you buy something with your card, we don't know what it is you buy, but we use aggregated, anonymized capabilities with the data analytics to be able to track fraud or be able to prevent cyber intrusion. And that's the point I'd like to underscore, is that I think governments immediately jump to, in the name of privacy, they jump to the idea that we need to have localized internets, localized clouds, localized data. And those are really 2 different issues. There are ways of protecting individual privacy, consistent with, for example, GDPR, while still allowing the flow of data that provides some important value creation. Because of the transactions we see all over the world, we're able to identify trends in cyber attacks and then help people fight against the cyber attacks. And we've estimated that we've saved banks $50 billion over the last few years in cyber intrusion because we see those transactions that we compare using artificial intelligence. We compare patterns of intrusions across from one geography to the next. If you have national clouds, national data restrictions, then you can't see those patterns. You're not going to be able to see that there's a new form of cyber intrusion that's emerging. And that's just one example. Certainly in COVID, the idea that we're sharing data across borders to have a better understanding of what's going on with the pandemic is absolutely critical to us being able to deal with it. And so we've got to find ways, and I think there are ways that the U.S. can play a leadership role in helping to, on one hand, assure privacy, and on the other hand, making sure that we continue to get the benefits around the free flow of data as prescribed in TPP, USMCA, US-Japan agreement, what's being negotiated potentially with the UK, so that we're getting both the innovation that comes from that, the security that comes from that, while also maintaining very much privacy as a priority.
Yeah, huge set of issues, and we're doing a bunch of work on that, including with your CEO Ajay Banga on our Trade Commission. We're talking about some of this and trying to figure out a sensible way forward. So it's really important, and stay tuned for the work that we're doing, and I'm sure Mike's doing on this. Amy, you want to take a question from the audience?
We've gotten a couple questions, coming back to China issues, Mike. And, as you mentioned, the administration under Obama had gotten very far down the road on SOE reform, IP issues, tech transfer discussions with China, and ran out of time. Europe, in the same way, is trying to make progress on these issues, also hitting a wall. And so the questions, I'm combining a few of them together, are tariffs the only form of leverage that we can use to make China change its practices? What are alternatives to that? And then another question is it realistic to think that China will accept changes to these practices under its current leadership?
Well, look, I think the challenge of tariffs, I think the Trump administration's use of tariffs and threatened use of tariffs has certainly gotten the attention of our trading partners and brought them to the table to discuss issues. It's gotten that far, and it's created leverage. The question is, how is that leverage used? In the case of China, it was used primarily to achieve the phase one agreement, rather than taking on these broader structural issues like state-owned enterprise reform, forced technology transfer, IP protection, subsidization disciplines, things of that sort. And so I would hope that whatever leverage we have, we could use to address the bigger, more systemic issues over time. I think the other issues that are on the agenda are the ones that were raised earlier around Chinese access to technology, investments in the United States, et cetera. And I think, across the board, we need to sit down and make it clear what we expect Chinese policy to be in the future. I'm hopeful in that, in the context of those negotiations, China went through the very difficult process internally of reaching consensus over what concessions they were willing to provide to us. And it wasn't complete, it wasn't 100%, but it was about 90% done. And so I'm hopeful that, having gone through that process in the context of a appropriate negotiation, that we can secure those concessions and the additional ones that are necessary, so that China is able to pursue its economic policies in a way that does not have a distortive effect on international trade and does not have an adverse effect on ourselves and others. That's the key thing, is that to make it clear that if they're going to pursue these policies, it can't have an adverse effect, an unfair effect on the rest of the global economy. That's what a rules-based system is all about. And so I'm hopeful that there could be progress on those issues using whatever leverage we have. And I think, having gone through the last 3.5 years, I think China realizes that there's now a consensus, broad consensus in the United States across parties, and more of a consensus between the United States, Europe, and our other major trading partners about what the challenges are of integrating China into the global trading system and what needs to be done to avoid further conflict in that area.
I think we have time for one more, maybe two, if we can sneak them in. But there's a question about Africa, which is interesting. I've been pleasantly surprised by the Trump administration's engagement with Africa, Prosper Africa, et cetera. There are many political, economic changes underway in Africa, such as the African Continental Free Trade Area, raising the possibility of a much more active African role in the global economy post-pandemic. How do you see U.S. engagement with Africa evolving in the near future, particularly with the scheduled expiration of AGOA, the African Growth and Opportunity Act, in the next few years? And, you know, there was the person threw in there post-pandemic, but it's not post-pandemic yet. So Africa is facing some real challenges right now, whatever its longer term aspects are. So you could fold that in as well.
Absolutely. Look, I think AGOA is one building block of this, but of course, you know, as we were, I think we did a report in the last year of the Obama administration about how ultimately we should be moving from preference programs to more reciprocal trade arrangements. The Trump administration announced the opening of a negotiation of an FTA with Kenya. I think that's one step in the right direction there. And I think Africa's progress towards a continental-wide free trade agreement, even though it's many years to implement, is still very important. And so I think we're all hopeful that they succeed in that there are more bilateral or regional engagement with these regional economic communities, and that Africa can continue to play an increasing role in global trade. I'd also say that, you know, it's very oftentimes when I go to Africa, people talk about the role that China is playing in Africa and all the money that it has brought to the continent and invested, for example, in infrastructure, roads, airports, et cetera. The more China is there, the more Africans want the U.S. to be there as well. And it's one reason we launched Power Africa, which this administration continued, because it was an area where we felt the private sector, from our energy sector, whether it's generation or transmission, distribution, could bring their assets to the table, invest in Africa. It's a difficult investment environment, but it's an important one. And I would hope that we would continue down that path of finding ways in which the private sector can also play a role, since we're never going to have enough foreign assistance or philanthropy to address these issues. There is, I think, a role for the private sector to play.
Well said. And, you know, the point about people wanting the U.S. to be offering, you know, an alternative, I think is very powerful. And it's you know, we can worry about what China's doing and maybe should be worried in a few specific areas. But in general, you know, it's a lot of these issues are a function of what we're doing, what we're willing to do and capable of doing. And there's a pretty, you know, strong demand for our presence. So we've got a great opportunity. Mike, this was terrific. I really appreciate your doing this. And as usual, tour de force, covering such a wide range of topics so well. I still say, that Mike defies the theory of comparative advantage. Having worked for him, he had about 10 people directly working for him. And Mike actually did each of our jobs comparatively better than we did them ourselves. So somehow that doesn't say what the textbooks are. So this is another example of that. Really, thank you so much for joining us, and good luck with all your endeavors.
Thanks for having me. It's great to see you both.
Great. And just hang on for 1 second, because we're going to show our segment, The Bottom Line, here in a second. But Amy, also thank you to you for stepping in as co-chair, co-host, co-pilot. And let's do this again.
Great to be with you both. Thanks so much.
All right. So now we're going to turn to The Bottom Line, which is our usual segment, kind of our moment of Zen, as I say, but it's really to highlight other research we're doing or other researchers or experts in our stable of experts. Today we've got Grace Harty, who is my deputy in the economics program. She's going to discuss regionalization of supply chains, which is something that we've been focused on in the CSIS Trade Commission that I alluded to earlier. So with that, we're going to turn it over to The Bottom Line, and thank you all for joining us.
Since World War II, the value of global goods trade has skyrocketed from a mere $59 billion in 1948 to nearly $19 trillion in 2019. This explosion was driven by factors that encourage companies to create global patterns of production, including successive rounds of trade liberalization, containerization and other transportation and logistics improvements, the expansion of wage gaps between the developed and developing world, and more recently, the widespread adoption of the internet. However, 5 factors have begun to weigh on globalization's unfettered expansion and are causing many companies to shorten their supply chains and lay them out on a regional rather than global basis. First, the shifting epicenter of the global middle class toward Asia will incentivize firms to locate production near expanding consumer markets in that dynamic region to better respond to market trends and reduce time to market. Technology, particularly automation and 3D manufacturing, will eventually make many labor-intensive jobs obsolete and reduce labor requirements for other tasks. Those technologies will allow companies to demand quicker production timelines and encourage suppliers to locate closer to consumers to more quickly deliver new products. Climate change will also contribute to supply chain regionalization. More frequent and intense weather events associated with climate change can raise shipping and production costs, delay the delivery of goods and services, and generate uncertainty that translates into business costs. As both a way to reduce their carbon footprint and minimize risk exposure, firms will opt to shorten supply chains. Fourth, government policies will encourage companies to bring production closer to home. The drive to build national champions in emerging industries in Europe, China, and India will likely lead to protectionism rather than more open trade. COVID-19 has added a 5th driver of regionalization as governments and firms pursue supply chain resiliency and try to minimize disruptions. A shift toward resilient supply chains can take a number of forms, some steeped in nationalism and government calls for reshoring. However, supply chain resiliency will likely be a combination of supply chain regionalization and diversification, as companies shift their production strategies from just-in-time to just-in-case. The regionalization of supply chains will not happen overnight and will not occur evenly across regions and industries, but it is an important trend to watch as the global economy recovers from the pandemic. To learn more and to learn how U.S. policymakers should respond to these changing global trade realities, please visit www.csis.org/Trade Commission.